Welcome everybody to chapter 15. And this chapter is pretty straightforward. It's pretty easy. Going to go through this chapter, which has got some basic journal entries in it. It's not too bad. It's how we cost jobs that we do for our customers. And we're going to spend most of the time not going through these slides, but rather working problems in Connect. So just a couple of things. Cost accounting, which is what we talked about in chapter 14. Cost accounting tracks the production costs and assigns them to products and even services that we provide to our customers. The end game here is we got to know how much these things cost us so that we can charge appropriately. So many amateurs, they would include the materials and the labor, but they wouldn't consider the overhead, which we need the overhead to run the business. This is in a very important chapter, and a lot of you, especially in this area of the country, a lot of manufacturing here. A lot of you will be doing this sort of thing or working with it. Even if you're not in accounting, you'll still be working in these types of industries. This chapter is about determining the cost of a job we're doing, which could be a service we're providing, like a massage. So with a massage, you would have what we pay the masseuse. That will be the direct labor. There really aren't any direct materials, right? Maybe the oil is an indirect material. And then, of course, there's some overhead, the building we work in, whatever. But costing the jobs or a product. Process costing, we won't get into until chapter 16. So I'm not even going to mention that. This is about determining the cost of big ticket items, custom things that are made to order. And it's easy to track the costs that go into those. And again, job order costing is the subject of chapter 15, this chapter. Next chapter is process costing. So with this, it's going to be special orders, custom made things for customers that order them. And then we can track how much materials, how much labor and overhead, et cetera, for each product. Remember, what goes into any product is materials, overhead, and labor. Those three things. And remember, there's direct materials and indirect materials, which we funnel indirect materials through this account called overhead, factory overhead. And with the labor, we have direct labor, which we assign to certain jobs. This is a custom car place that buys junked cars and then fixes them up, and the classic old cars that looks like a Renault and a Rolls Royce or whatever, but the labor is the people that are working on them. Now, indirect labor is like the supervisor who doesn't really work on any one car. She's just walking around supervising. Indirect labor is funneled through, again, the overhead account, as are the other overhead costs. And then, as jobs are completed, we would move them from the work in process T account over into the finished goods T account. And then once they're sold, they would be funneled into the cost of goods sold T account, which means we don't have them anymore. They have been sold to customers. And if you recall, you can still use in this chapter this diagram, and we're still going to use this diagram here a lot. So be sure you have that handy. It's on your Unit 1 study guide. But what I want to do now is start by going right into the practice. Quick Study 15-3, recording job completion and sale. A job cost sheet is just where we keep track of the costs of jobs. Here's a job cost sheet. So it's just direct materials, direct labor, and overhead, and we just accumulate the various costs for this one job. So the job cost sheet for job A40 shows that the total cost to add security features. So what we're doing is we do autosave, is we modify cars with security features like alarm systems, et cetera. The total cost to add this was $10,500. And then we delivered the car to the customer, and the customer gave us $14,900 because obviously we want to make a profit. It says here, when we complete the job, now look at your manufacturing T accounts here. When it's in work in process, we're working on it, right? But then when we complete it, we debit finished goods and credit work in process. We take it out of work in process, put it into finished goods. Let's debit that, credit that. So record the transfer to finished goods. And what were the costs? $10,500. Don't worry about what we sold it for yet. We haven't sold it yet. Right now, we're just transferring the cost into debit finished goods out of work in process. Okay. Then the next thing we do, record the sale. Remember, anytime you sell something, it's 2 journal entries. One records the revenue and the other one records the cost. So we're going to first record the cost of the sales. So what we're basically doing here is, if you look, it's been sold, right? So we don't have it anymore. So we're going to take it out of finished goods by crediting finished goods and put it into this account, cost of goods sold. This isn't the revenue part. This is the cost part. Debit cost of goods sold, because we're putting it into that account. And of course, where are we taking it from? Finished goods, of course. And it's at the cost of $10,500, because that's what it cost. We're not using $14,900 here because it's the cost. Okay. It was only here at $10,500. So when we take it out of here, we need to take it out at $10,500 and put it here. But that's not all. I mean, obviously we got paid. So how do we record what we got paid for, or, you know, the amount of revenue we earned? Yeah. We earned $14,900 and they paid us. So $14,900 is the amount we're going to put here. But what do we debit? What do we credit? Just remember this, if you don't remember from 101, always credit revenue. And sales is our revenue account. It goes on the income statement in the revenue section. It's what we earn. Now the cash part, because they did pay us, we would debit cash, because cash is an asset, which is a debit balance. So if we get more cash, we will definitely want to debit cash. So this would actually be the journal entry to record the revenue. And it goes hand in hand with this entry, which records the inventory leaving the premises. Cost of goods sold is an expense account, which is on the income statement right under sales. So we have sales of $14,900, cost of goods sold of $10,500. So our profit on this sale, our profit is $4,400 on this merchandise. Pretty good. This one's pretty easy, but maybe I'll just show you how it is, because not all these problems in the homework are journal entries. Some of it is just filling out job cost sheets. This is a job cost sheet, which is, again, how we keep track of the costs of a job we're doing. And this is for a job lot. Job lots means we're making a number of things for a customer. So this is a customer order, but this customer wants 2,500 of something. I don't know what it is. Customer's name is Huddett's Company, and that's the dates. Direct materials, we actually requisitioned. Now, requisition is a fancy word that's used in business a lot. It means we just request these from the direct materials warehouse, and it was put into work in process. So this came out of direct materials into work in process. Direct materials, right? Not indirect, because indirect materials would go into overhead. So we know this was put into work in process. And as far as direct labor goes, we basically paid our people $60,000 to do so far, to do these jobs. And as far as overhead goes, now this is where we're going to get into the overhead application stuff. So let me just back up a second and talk about this. When we buy raw materials, we just put them in here, right? But when we use them, you know, put them into process, we take them out of here, credit raw materials, debit work in process. So that's where this money is going to go, is out of here into here. The direct labor is just $60,000. That doesn't really come from anywhere, but it's going to go here. The 60, is it 60,000? So I can actually start putting numbers in here. And the direct materials are 43,750. Let's go put it here, 43,750. And 25,250. That's 69,000. So the direct materials come out of here, go into here. Direct labor goes there. Now the overhead, so the actual overhead, factory supervisor salaries, you know, indirect material, you know, just whatever goes here. When we use indirect materials, it comes out of here, but goes into overhead, right? Putting it into work in process. Now listen up, this is kind of a new concept for you. When we have actual overhead costs, which means indirect materials, you know, indirect labor, I don't know, put numbers here. Other overhead costs, $50,000. That's fine. We put them here, okay? We debit factory overhead. And now every so often, or with every job, or maybe once a month, or however often the company wants to do it, we will take overhead out of here and put it into work in process. They're telling us here, how much overhead are we going to apply to this job? And we normally use a formula to do that. So here they're telling us overhead is going to be 160% of the direct labor cost. Well, what is the direct labor cost? 60,000 times, now 160%, that means times 1.6, right? If you move the decimal. So 60,000 times 1.6. Yeah, that's $96,000. So we're going to take 96,000. So we're going to take 96,000 out of this account and stick it here. It's called overhead applied. Actual overhead goes here. When it's applied to a job, we take it out of the overhead account by crediting it and debit it into the work in process account. And they're going to give you the rate of application that, like, they're going to give you the 160% of whatever. In this case, we're applying overhead at a rate of 160% of whatever the direct labor cost is. So the total cost of this job lot, 69 plus 60 plus 96, you know, I guess that is what? 225,000. Pretty easy. Cost per unit. Well, I guess we just divide by the number of units, right? 2,500 units. At $90 per unit. This is good info. These things cost us $90 a piece to make. Now we're not going to charge them $225. We're going to, you know, mark it up, charge them more. But it'd be nice to be able to tell the customer, you know, these things cost us $90 a piece to make. Good information there. All right, recording materials. Just some more journal entries here. You want to quickly do this one, see if you can figure out what it would be. So record the raw materials purchase, paid in cash. All right, guys, 50,000, right? Tell me what to debit.
Raw materials, cash.
Yeah. Raw materials inventory, and then credit cash, because we paid cash for it. To record the cost of the raw materials used indirectly in production. So it says we use 12,000 of raw materials as indirect materials and 32,000 of it is direct. So what about the indirect materials of 12,000? What are we going to debit? What are we going to credit? We're definitely going to credit raw materials, right? Because we're taking it out of there. But where are we going to put it? In work in process? No. We put indirect materials used in factory overhead. For raw materials used as indirect materials, we're going to debit factory overhead. Factory overhead, 12,000. We're going to put it into the overhead. We're going to take it out, of course, of raw materials. So that's the journal entry to use indirect materials. Take it out of here, okay, and put it into there. Debit factory overhead, credit raw materials. Now for the third one, record the cost of raw materials used directly. So the direct materials are 32,000. Now for direct materials, of course, we take it out of here. Oh, what was the number? 32,000. We take it out of here, but we put it into work in process. So as you can see, we're going to debit work in process, credit raw materials. Debit, what I say, work in process. But take it out of, or credit, raw materials. Just know the difference between indirect materials and direct materials. Now, recording labor is just pretty straightforward. Direct labor, indirect labor. How do we record direct labor? Well, I know in the olden days, in Accounting 101, you would have wages expense, wouldn't you? They earn the money and you have wages expense. Not so in manufacturing. You debit work in process. That's right, you debit work in process. Because this labor is being used to make things that we're going to sell. Okay, so it is not an expense. It's part of the asset. So that's going to go here. Direct labor is 150,000. It's going to go here. This labor will not be an expense until we actually sell the stuff. Everything here is going to go here. And then when it's sold, it's going to go here. This is an income statement. This is an expense. But until then, it's an asset. For direct labor use, we're going to debit work in process. And I don't know if we're paying them in cash. Does it say? It doesn't say. If payday is going to come later, it's going to be salaries payable or something like that.
I think it's later because it says monthly payroll.
Okay. Yeah, I'm with you on that. Let's just type the word payable, see what comes up. Well, I need to spell it right. How about factory wages payable? Let's try that. Let me check my work. Yeah, that's correct. Now, the second one is indirect labor. So for indirect labor, again, it seems weird to not do wages expense, but for indirect labor, we're going to debit factory overhead because it's indirect labor. So that amount would be 30,000. I guess we'll credit factory wages payable again. There we go. All right, there's that. Okay, so now a little practice computing predetermined overhead rates. This is like that 160% of, what was it, direct labor we had in the other problem. Again, remember, when we actually use indirect materials, use indirect labor, or incur other overhead costs, we debit factory overhead and then credit whatever, cash or whatever. But every so often, we're going to move some of this into work in process, and that's called overhead applied. And we generally use some sort of some percent of something. And the problem will always tell you what that's going to be. So in this one, our predetermined overhead rate is going to be a percent of direct labor, just because the company has decided that's how it wants to allocate it. There's these costs they give us. Now we're going to use, to come up with that rate, we're going to use our estimated costs from last year, or our actual costs from last year, as kind of an estimate of how it's going to be this year. So we estimate that we will have the following costs: direct labor, direct materials, overhead. The numerator is always going to be the total estimated overhead for the year. And the denominator is going to be as a percent of, I guess, the total estimated direct labor for the year, 468,000. And the estimated direct labor for the year is 468. Basically, what we're going to do during the year is we're going to take out overhead and put it in here. And what amount? What amount? Well, basically for every dollar of direct labor we use, where's direct labor? For every dollar of direct labor used, we'll take 25% of that, take it out of overhead and put it into here. Don't be fooled. I mean, the direct labor is what it is. The direct labor is a number that, you know, it's what we're actually paying our employees. So that's a regular number, and don't be fiddling with that. The only reason we're using this number is just a means to an end, just a way to get our overhead out of here and into work in process where it belongs. So we're just coming up with an arbitrary percentage of doing this. And this is what they've told you we're doing in this problem. Now, in this example, it's going to be a percent of direct materials and then overhead. It's 117. And the estimated direct materials are 390. Okay, so another way we could do it, you would not do both of these. This is just two different choices. Another way we could have done it is we could have just taken 30% of the direct materials used. Okay, so how much direct materials were used? 32,000, right? Okay, well, what's 30% of 32,000? 32,000 times 30%. 9,600 we're going to take out of here and put it here. So it's just a means to get the overhead out of here into here. And this is, we're just using this rate. Now this, I don't think I need to go through this. It's just record actual overhead costs. So again, to record indirect materials used, just debit factory overhead. And then credit raw materials. We've been through this before, yeah. Indirect labor, we just credit, we debit, of course, factory overhead, right? We'll credit wages payable, you know, something like that. Now look at this, other actual overhead costs. Let's see. Let's take a stab at this. This might be a little more difficult. And again, when we record other overhead costs, we will debit factory overhead, right? No doubt, right? But the credits are what's going to be hard. Let's take a look at this. There's indirect materials, indirect labor, 9,000 of depreciation on factory equipment. Is that included in overhead? Yes or no? Yes, because it's factory equipment. Factory utilities, yes, because it says factory. Factory insurance, yes. Oh, just those three things then. Okay, so we've got 9,000 plus 12,000 plus 800, right? That's 21,800.
And the insurance expired.
Oh, sorry, 500 as well. That's 22,300. So that's my overhead. What do we credit? Well, it's several different things, isn't it? So for the depreciation, we're going to credit what we credited in Accounting 101. accumulated depreciation of what? Factory equipment. Okay. And what is it? 9,000? Yep. 9,000. And then for utilities, we haven't paid it yet. So we got the bill, we haven't paid it yet. So it's utilities payable, 12,000. So utilities payable. And then we've got factory insurance, 500. Factory insurance expired. Ooh, what does that suggest? What had we done previously?
Prepaid insurance.
Yeah, we had prepaid it, hadn't we? And this much is being converted to expense, isn't it? Because it's expired. The thing is, with a manufacturing company, you don't debit insurance expense. Instead, you would debit overhead. And it's included in this 22,300. But what we credit is this prepaid insurance for 500. Tricky, right? Prepaid insurance. Okay. All right. So there's my raw materials taken care of. There's my indirect labor taken care of. So really, this would just be the depreciation, utilities, and prepaid insurance. 13,300. Okay, so that's the rest of it. Yeah, there we go. So this is recording overhead, actual overhead incurred. So when we incur that overhead, we will literally just put it in here. Indirect materials, right? 6,200. In indirect labor, 9,000. In other, 13,300. Okay. And then at some point, we will allocate it out of there into here, but we are not doing that right now. One last thing I've got to talk about is closing out the factory overhead account. See this word here, always zero? It's always going to start with zero and it's always going to end with zero. You cannot end up with a factory overhead account sitting on your balance sheet. It's got to be zero. All the overhead every month or every year, however often you do financial statements, has got to be cleaned out and put over here. And remember, this is the actual overhead. We actually did have these expenses or these costs. And hopefully, ideally, we need to take it out of here into here gradually. And if all works beautifully, we will take it all out of here and put it here every year. But as you know, estimates don't always give us what's in an ideal world. So sometimes we have to zero, we just have to zero this out. Here's a T account. There's my debits, there's my credits. A company applies overhead at a rate of 150% of direct labor cost. Actual overhead cost is 950. That goes here. Actual overhead, 950. Because we debit overhead for the actual overhead. All right. Direct labor cost is 600. I don't care what that is. Well, I guess I care here, right? We're applying. Applying means to take it out of here, applied overhead, and put it into work in process. How much of this did we apply over to work in process? Well, we're going to take it direct labor times 150%. Okay, so what have we done? We had actual overhead of that, and this much we took out and put over in the work in process. Well, what do we end up with? We ended up with extra on this side, right? 50,000 more on that side. And I think we're going to call that over applied or under applied. That's the actual. We applied only 900,000, so we under applied, right? Under applied. Yeah. So it just says compute over or under applied overhead. So we have under applied it during the month. We actually had that. We ended up only applying that much. So this has got to go. Prepare the journal entry to close that out because we cannot end up with that, folks. This factory overhead account is sitting here with 50,000 in it, debit balance. To get rid of it, we need to credit it. You would credit it to get it to zero. It needs to be zero because it's currently sitting with a $50,000 debit balance. So to get this to go away, we need to put 50,000 more on this side, bringing both sides equal, which will zero it out. So the journal entry to close this out is to credit factory overhead. Go ahead and do that first while I'm thinking about it. Credit factory overhead. 50,000, that'll get rid of it. Yeah, the question is what to debit. Who knows, right? What we're gonna do is debit cost of goods sold, okay? So the rule is whatever you need to do to close out your factory overhead, if we needed to debit it to close it, debit factory overhead, then we would have credited cost of goods sold. Cost of goods sold is just the plug. Just to kind of demonstrate it. We're kind of sitting here now with how much? 950 in our overhead account. I'll just put it here, 950. And we only ended up applying 900,000. So that's a problem, right? In order to get this zeroed out, both sides have to be equal. So I need to put another 50,000 here. Credit that. So I just need to debit something. I'm going to debit cost of goods sold. I know we didn't really sell anything, but what this really, please stay with me here because this is kind of deep here. What really happened is we actually ended up spending more on overhead than we thought we would, see? And that's an extra cost. And did we sell that stuff? Sure, we sold it. We'll just stick it into cost of goods sold because it does represent an additional cost of making and selling this stuff. Whereas this 900,000 went up here, you know, and it flowed through here and it flowed to there. So it ended up here, and that's awesome. But there just ended up being 50,000 more of actual cost than we thought there'd be. So we're just going to debit that and credit that just to clear it out. This has to be zero. And I put that note here in green. Okay. And I put the offsetting is cost of goods sold. So just refer to this when you're doing your homework. It'll really help you. This is a really good one, which you should have fun with. If you need help with this big one, see me, but I worked it and it wasn't that bad. All right, I think that's where we'll close out now. Thanks, guys.